Hi everyone, I'm Karan and welcome to Karan's Gyan. The stock on focus for today is Tata Motors. Today, a news came out that Tata Motors is selling loan assets of its finance firm to banks after not finding a buyer for its stake sale. So, I would explain to you how Tata Motors is selling their loan assets or their finance firm to banks, and why did Tata Motors not find buyers for their stake sale. So, after reading the news, the key takeaway points are: first, Tata Motors is struggling with mounting debt amid widespread economic turbulent times. As you know, there are economic turbulent times because coronavirus has disrupted the entire market, from housing finance to automobile industry. The gross debt of the company stands at rupees 1,24,788 crores, and this debt has increased from the debt which was last year. The debt last year was 1,06,174 crores. This is a huge amount of debt. Its net debt is about 48,282 crores, and this net debt has increased from last year's debt of rupees 28,391 crores. Now, what is the difference between gross debt and net debt? So, gross debt is all the liabilities of the company on the book, whereas net debt is liabilities minus assets. So net debt in this case is low because Tata Motors obviously has assets, and if you want to find out the net debt, you will subtract the value of liabilities, all right, from the value of assets. The debt has seen a rise sharp because of severe drop in sales. Again, as I told you, there have been economic turbulent times, and due to coronavirus, nobody is buying automobiles. So Tata Motors as a whole, Tata Motors as the parent company, which is Tata Motors India, and its subsidiaries, which are British subsidiary Jaguar Land Rover and its auto financing subsidiary, which is Tata Motors Finance. All three are facing trouble, both the parent and both their subsidiaries. So Tata Motors India posted a loss of 7,290 crores compared to a profit of 2,000 crore last year. So its position has become much worse from last year. Again, its British subsidiary Jaguar Land Rover or JLR has posted a 469 million loss. This GBP is Great Britain pound. So its loss is about 469 million pounds. Jaguar Land Rover has a major market in China, and since China is in trouble already because coronavirus has disrupted even their market, it has faced a loss of 175 million Great Britain pounds. Now, this figure is in Great Britain pounds is because Jaguar Land Rover is a British subsidiary, so it shows loss and profit both in pounds. Tata Motors Finance, its auto financing subsidiary, is also in trouble, but it is in trouble with NPAs, non-performing assets. Like I told you, a lot of companies that are providing financing, be it housing finance or motors finance, they are in trouble with NPAs. The NPAs have risen to 5.1% compared to 2.65% last year. So how is Tata Motors fighting debt? So Tata Motors is trying to raise money to control its debt. Tata Motors had an infusion. Tata Sons, Tata Sons, the parent company of Tata Motors, had put an equity infusion of rupees 6,500 crores despite in December last year, whereas this amount is still not enough because Tata Motors has a debt of about 50,000 crores, has a net debt of 50,000 crores. So it would need much more money to tackle this debt problem. So now there are three ways to raise money in the market. First is use internal cash flows from profitable subsidiaries. Now, since both the parent company and both the subsidiaries of Tata Motors, which is Jaguar Land Rover and Tata Motor Finance, all three are in trouble. So you can't, raise cash flows, raise money from profitable subsidiaries. No, nobody's profitable. Raise money from market as a debt. Well, you can't raise money as debt to pay your debt. You can't take a loan to pay your previous loan. Then you'll be stuck in a vicious cycle of debt. So they already have a debt of 50,000 crore. Number one, no bank would lend them money, and they'll say you already have 50,000 crore loan. If you pay back your current loan, how would you pay back our loan? Right, so that again is a problem. This is something that's really stupid, and Tata Motors won't do that. Next is sell equity stake in the company. Now this is again a problem since Tata Motors is struggling and automobile industry as a whole is struggling. Nobody wants to take a stake in a company that is struggling. They'll wait for days, better prosperous days, and then they'll invest in a stake in company. And even if someone's willing to buy the stake, they'll quote a very low price for Tata Motors because, well, Tata Motors isn't doing well, and you won't pay a lot of money for a company that isn't doing well. So management would be foolish enough to sell an equity stake in the company. So since you can't do all of the above, you gotta sell your assets. That is the only way to reduce your debt. Now selling your assets can be a red flag because you're not able to do all the three above. Hence, you gotta tread. Tata Motors has got to tread carefully on what it should do and what it should not do in the coming days. So, what Tata Motors is trying to do right now, and I think it's an intelligent option. Tata Motors Finance, which is a subsidiary of Tata Motors, it is trying to sell its assets. How are they going to sell their assets? Through securitization. Now, what is securitization? Securitization is conversion of an asset, especially a loan, into marketable security. As I told you, Tata Motors finances motor vehicles, so it gives out loans for people who want to buy car. So it's going to convert its asset, which is especially a loan, into marketable security, and then sell these marketable securities for the purpose of raising cash. So what it'll do is it'll bundle up all its loans based on how good are the people who have taken loans. Like if people who can pay back the loans, they'll bundle them up and they'll rate that bundle as on the basis of how likely are people to pay back the loans. So if people are really likely to pay back the loans, they'll get it rated, and they'll get it rated as AAA or maybe AA, which is a good rating. They'll bundle up these loans and they'll have a pool of similar loans. So similar loans in the sense means people who are likely to pay the loans. So by that I mean similar loans. So they can make a pool of people who are not likely to pay the loans. They can make a pool of NPAs. So there'll be risky loans, and technically you'll get higher interest on them. So I'll explain you the concept of securitization. They'll bundle up all the loans, they'll pool them up, and they'll transfer it to a special purpose vehicle. A special purpose vehicle is basically a third party, a trustee, someone who would, you know, uh, like have the loans with them. So, who isn't Tata Motors or the investor who's buying them. This third party is responsible for interest, collecting payments from people who have taken loan. These third parties are responsible as trustees. By trustees, I mean somebody you trust. So they'll be trusted both by the investors and Tata Motors. As a result, this is credit enhancement. In the sense, it actually doesn't let Tata Motors cheat the investors. So this is the point of having a special purpose vehicle. So they'll make a pool of all those similar loans. They'll make a huge pool of loans, and they would basically securitize these loans. All right, and make it into marketable securities, and they would sell these marketable securities to investors. So basically, what is happening is the loan people who have taken loan, they'll pay their in the loan EMI to the pool of loan. So everybody who has taken loans, all right, they'll keep paying their EMI. The EMI would go to a special purpose vehicle who are loan servicers. By loan servicers mean people who are responsible for taking, like servicing loans. They would collect the money from everyone who have taken loans, and they'll distribute the money they have taken to the investors who have invested in the loan, who have invested in the securitization, in the security, in in the asset-backed securities. So these are securities that are backed by assets. The assets that are backed are basically loans of Tata Motors. So basically, Tata Motors Finance have shifted the liability from them to the investors. So it is on the basis of investors' risk appetite of what type of loans they want. Some investors may want a higher risk, so they'll be willing to take loans that are at a higher risk of default, and of course they'll be compensated by it, because um, loans that are at a higher risk give a higher rate of return compared to loans that are at a lesser risk. So risk would give you equal returns: higher risk, higher return; lower risk, lower returns. So, guys, this is pretty much it about the news of Tata Motors selling its loan assets of finance firm to banks after not finding buyers for the stake sale. Alright, guys, I hope you liked the video. If you like the video, please press the like button.